Welcome to my YouTube channel. My name is Tabitha, and today we are going to talk about entry price, stop loss, and take profit. So I've been looking forward to make this video so you guys can know how to plan your trade and how to enter, how to decide on how much you want to lose, how much you want to take profit, because it's all the process. It's like business, so you know what you're putting in and what you're getting out of it, what you might lose, so something like that. So let's now look at that. If you're new to this channel, please subscribe for more videos, and I will appreciate your support. So now let's look at the agendas of today, which are going to be just few. So we are going to look at what are all these entry points are, like entry price, a stop loss, and take profit. And then we'll give you example on the long position, because most of the time I do not do short position. So we do long position, which means buy low, sell high. So we look at those one, and then we'll show you how to now place the trade. So how do you place the trade on Quest Trade Edge? So long position, and then the example, live example about that. So let's begin. So let's look at the long trade. So when we are doing long trade, we are buying low, sell high. So when you are buying low, sell high, it's called long trade. Okay, you're going long on the trade. But before we do that, we have to know what are the entry price, what is the stop loss, what is the take price. For people who have been doing this in the right way, they already understand what these points are. But if you're new, you can learn today that entry price is a price in which you buy the stocks. Stop loss price will be the price in which the trade exit with a loss. So this is, you have already decided how much you are willing to lose. So you also know how to put the stop loss and see how it goes. Take profit is where your trade, the price in which the trade exit with a profit. This is where you take your profit once the trade is profitable. So it's a winning trade. You're going to make profit from them. So now let's look more into it. So let's say you have your capital, and on this capital you will decide how much you are willing to lose per trade. So okay, so you have to decide the risk per trade. You have to decide that, and then decide the risk per share, and then you will now calculate your reward, right? So here, if you have a capital of 2,000, how much you're willing to lose per trade? Is it 1%? Is it 2%? Is it 3%? Depending on risk tolerance that you have. So if you are willing to do 2%, 2% will give you maybe a longer time in the market, because maybe 1% can easily kick you out like so easy, and then you lose the opportunity like of getting the profit, because most of the time the price fluctuate. It might have been like doing a small move, and then there you go, it kicks you out. So people prefer to use 2% for the people who are at the lower risk tolerance. On that side, they will do 2%. It will give them more time to be in the market. Even if like the price do the shaking, they are not going to get out as soon as it hit the 2%. So risk per share, you decide that you want willing to lose $2 per share. $2 per share is the one that you're willing to lose, which really give you a reward per share that would be 2 times R. So 2R. Most of the time, the reward per share will be 2R, which is 2 times 2. 2 times the risk. Okay. So here you will be willing to lose $2 to gain $4. Okay, so this 2 come as the R. It's the risk that you're willing to lose per share. So that risk times 2, you get $4. Now let's go ahead and calculate how many shares you're going to buy using this information. So how do you know how many shares you're going to buy without really um, without losing all your capital? You need to have a plan and see how much money you want to spend and how much money you want to keep in your account as maybe a buffer to see how things goes. So you had already decided that the risk per trade, like the risk per trade will be 2%, and your capital is 2,000. Risk per trade is 2%, capital is 2,000. So on this trade, the only thing that you want to lose is only maximum $40 because your risk per trade is 2%. The risk per share is $2, right? The risk per share. So from the entry part to your stop loss has to be $2. So now let's do the calculation. So you will do 2,000 times 2% divided by $2. So this is your capital times the 2% risk that you're willing to take per trade, and then divide by the $2, the risk that you're willing to take per share in dollars. Okay. So when you make the calculation, you get 20 shares. So we have now decided that we are going to buy 20 shares. So let's go ahead and do the whole things. So let's say, for example, we are going to do the position size for Nike, symbol NKE. So you will look at the hash price because most of the time when we are buying the share, we are going to take the hash price, not the bid price. So the hash price, sometime even when you use the hash price, it could have like some cents difference between the actual price that they filled you in. So position size will be 81.7 times 20 shares. So this is the amount that you are going to spend. So this is the price per share that you're buying, and then you're buying 20 shares. So you will spend 1,634 of your account, that capital, the 2,000 that you had. When you now get the winning trade, you will take the $4 times 20 shares. So you get $80. So that the profit that you will make if things goes the way you want, like winning trade. So the profit is $4 times 20 times 20 shares, you get 80. If unfortunately you didn't do your analysis properly and something happened and it goes the other way around, your losing trade will be 2 times 20, which will give you $40. So you are going to lose only $40 for the trade. So which was the original 2% that you were willing to lose per trade. So it's $40. So now let's go ahead and see how it goes. Entry price is 81.70. The stop loss, where do you place your stop loss? Here. So it will be 81.70 minus 2. So you get 79.7. Take profit price is 85.07 cents. So how do you get that? You get 81.7 plus $4. So that will give you $85.70. So those are the entry point that you are going to use, so you can make that $80 per $80 profit, and or you may lose $40 per trade. So let's look at the example, live example on Quest Age. We are using Quest Age because it will help you. We're using Quest Trade because it will help you. So now let's go ahead and do. So now we are logged in on Quest Age. Sometimes there's a regular website and then there's Quest Age. Quest Age is for mostly for trading, so you can download that, but you will still have to log in with your normal login credential. So it's the same thing. So you log into that, but this platform, this app help you place order at the same time. You don't have to say, okay, let me come and put the profit order, let me come and put the buy order, or maybe let me put the stop loss order. So once you have already done your calculation and you're ready to do that, and then you can just come here and then add. So the quantity that we had already calculated was 20 shares, okay? And then here is the limit. For the buy, you put the market, right? So, but here you have to type in the one that you're looking for, which is Nike. So, like the way we presented before, it was like 81.7 in our example, but at this point is at 81.44. Okay. So you can use that market price. But for our example, we put 81 and 70. This is only 70 cents. This is only when that price. But if you now buying at this point, when you were buying at that point, when we were making the example, you would put that. But if you're not buying now, you can use this one. So, and then the duration is good until cancel. Okay. So you're not doing the limit order, you can do the market order. So the market order will fill that. But in our example, our market order will have been 81.7. Okay. And then once you finish that, you can now click here on the bracket order. So we're sticking to our example. Let's say let's assume like our hash price is 81.7, which was our previous, and which is the market price. At this point, we are coming to give you example while it has dropped to 81.43. So, and put GTA. Let's assume that is what it is. And we had already calculated 20 shares that we are willing to buy. And the account is here. I've already. So the account that you're going to buy the shares from is that one. And then now let's come down here to see how to place profit, loss, exit. So you have the quantity, which is 20. And your stop loss, you say stop loss. The 20 shares when the price hit. When the price hit 79.7, like the example that we had already made, okay? And then profit limit. So take my profit when the price hit 85.7. And then once you get all that done, you can now put the click buy. Okay, so when you buy, so you already know this is the quantity that you're going to buy. You click the account, you have the profit limit, so you will sell at 85 0.7, and you will stop loss at 79.7, and this will give you your target profit that you are talking about, which is $8 profit and $40 loss if you are not that lucky enough. But we are using our market price of 81.7, and that's it. You can now hit buy and wait for your things to work out. This one you don't even have to monitor. You just go, come back and check. If it's a loss, so you lose $40. If it's a profit, you make $80. And that's it.